Welcome back to the deep dive. Okay, today we're tackling a really big question, one a lot of people wrestle with. Should you put a significant chunk of your net worth into Bitcoin?
Hmm.
And this isn't just about Bitcoin, really. It's about something deeper conviction, doing your own homework, and really getting what you're investing in.
Absolutely. It
Mhm.
applies across the board.
So our mission today isn't to give you the answer. We can't do that. Instead, we want to help you figure out how to approach this. We're looking at a pretty interesting YouTube discussion that dug into this exact thing.
Yeah, he had some great insight.
We're going to pull out the key ideas about, what real conviction looks like, why understanding is non-negotiable, and maybe some risks in traditional assets that you haven't really thought about. Let's get into it.
Yeah. And what's interesting right off the bat is uh, the source suggests that just asking the question, how much should I put in?
Hmm.
That might mean you're not quite ready.
Right, because if you have to ask someone else...
It implies you haven't built that foundation yourself.
Yeah, that reminds me, there's that great Charlie Munger story about Mozart. You know the one?
Yeah. Tell it.
Okay, so this guy asks Mozart, like, how do I write a symphony? And Mozart just says, you're too young.
Huh. Blunt.
Totally. And the guy says, but hang on, you were writing symphonies when you were like 10. And Mozart's reply was perfect. Yes, but I didn't run around asking people how to do it.
Exactly.
Yeah.
And that connects directly to investing, especially something like Bitcoin, which is, well, let's face it, complex and often controversial.
So the source's point is...
The point is, if you have to ask how much Bitcoin should I buy, the answer is probably none, or at least not a significant amount yet.
Because that conviction needs to be built on rock, not sand.
Precisely. Not on what others say that's the sand. It needs that foundation of stone, which comes only from doing your own deep personal research and, crucially, understanding it for yourself.
It's that proof of work idea again, but applied to your own brain, right? You
Right.
just put in the effort.
Exactly. In the Bitcoin world, proof of work secures the network. Here, it secures your investment decision. You can't just, rely on a tweet or what your friend says. That's not real conviction.
And why is that so insufficient? I mean, isn't getting advice part of learning?
It is, but there's a difference between learning and outsourcing the decision. Your situation, your income, your savings, your tolerance for risk, where you are in life, it's completely unique to you.
So what works for someone else?
Might be totally wrong for you, maybe even disastrous. There's no magic percentage that fits everyone.
Okay, that makes sense. But how do you know? How do you know when you've crossed that line from just learning to actually understanding enough to, say, put a serious amount of savings into something? What's the internal signal?
Well, the source paints a pretty vivid picture. It says you'll know you're getting there when you're, lying in bed every night worrying about why you still hold so much fiat money.
Worrying about holding dollars, euros, yen.
Yeah, exactly. Or worrying about holding debt in water stonks. That's a funny term for regular stocks. Or treasuries or bonds that are basically guaranteed to pay you less than inflation is actually taking away.
So you're actively losing purchasing power.
Right. You start seeing those assets as the risky ones.
Yeah.
And it even extends to, shiny yellow rocks, gold, or shiny silver rocks.
And they didn't stop there, did they? There was that jab at real estate, too.
Oh, yeah, the wooden structures with terrible tenants.
That's quite an image for rental properties.
It is. And the point being made is that rentals often leak economic energy. Think about it. Property taxes, insurance, constant repairs.
The leaky roof, the overflowing toilet.
The new carpet, the new paint, it all adds up. These costs are relentless, and they just eat away at your actual returns.
Yeah.
It challenges that whole idea of property being a simple, passive investment.
It really does flip the script on what we usually think of as safe. But let's zero in on fiat money for a second. That's kind of the default setting for most people's wealth. What are the deeper issues there?
Well, the fundamental flaw, according to the source, is that fiat is essentially guaranteed to lose purchasing power over time. It's baked into the system.
Inflation.
Right. Call it the inflation tax. It's silent, it's steady, but it consistently erodes what your money can actually buy.
Guaranteed to lose. That's pretty stark when you think about the money in your bank account. Is there, A historical example that drives this home?
Definitely. The source points to the U.S. dollar, arguably the most successful fiat currency ever, especially since Nixon took it off gold in '71.
Okay, the world reserve currency.
Exactly. And even that dollar, the best of the best, lost 85% of its value over the past 50 years.
85%. Wow.
Yeah, something that was worth, say, $6.39 in purchasing power back in 1970 was only worth $1 by 2020. And the source's chilling conclusion, that's as good as it gets for fiat.
Okay, 85% loss for the best performer. That really puts things in perspective. So inflation is like this slow, grinding risk. Are there faster, more sudden risks too, like shocks to the system?
Great question. Yes, absolutely. Beyond that slow erosion, you have the risk of things like bank failures and the really scary one, bail-ins.
Bail-ins? What's that?
Think Cyprus. Back in 2013, there was a major banking crisis.
I remember hearing about that.
Yeah. Depositors into the biggest Cypriot banks literally lost billions when savings were confiscated. If you had over 100,000 euros in your account, poof,
They had just took it.
they took a huge chunk, something like 40 or 45% of it, gone overnight, just taken from people's accounts to basically save the banks.
40%. Just confiscated. That's terrifying. Did people have any legal options? Could they sue?
They tried, but here's the really disturbing part. The court basically ruled against them.
What? On what grounds?
The court essentially said that the depositors hadn't proven their right to property was infringed, which, I mean, it effectively meant the court decided people did not have a right to their own money when it was sitting in that bank.
So the legal system confirmed they didn't own their own savings in the bank.
That's the precedent it set. It highlights a massive vulnerability in the traditional system that I think most people just aren't aware of. Your money in the bank might not be your money in the way you think it is.
Wow. Okay.
Yeah.
It's a lot to process. But sometimes seeing how one individual navigated all this makes it click. The source talked about Matthew Crater's journey, right, as an example of building that conviction.
Yeah, his story is quite powerful.
So what did he do? How did his journey unfold?
Well, he started buying Bitcoin back in 2019, just holding, being a hodler.
Okay.
Then he kept buying consistently. Even as the price soared in 2021, buying it 40K, 50K, 60K.
Right up to the peak.
And then this is the crucial part. When the market crashed, he kept buying all the way down, even when it went below $16,000
Yeah.
during that really brutal bear market.
That takes serious nerve or serious conviction.
Exactly. And his conviction led him to make huge changes. He sold his gold stocks. He sold his rental houses.
Those leaky wooden structures.
Huh. Yes. He even sold a car, all to put the money into Bitcoin. He was trying to get out of everything else, even illiquid stuff like venture capital funds, which, can take a decade or more to pay out.
That's a massive shift in allocation. And didn't he make a big public change too?
He did. He changed the name of his popular YouTube channel from Trader University, which focused on stocks, to Bitcoin University.
Wow. That must have caused some backlash.
Oh, yeah. He said it alienated literally thousands of subscribers who were there for the stock trading content. It was a huge pivot professionally and personally, and this whole transformation took like 3 or 4 years.
So why did he say he didn't regret any of it, especially buying during the crash? That seems counterintuitive.
His explanation is key. He said his level of understanding of Bitcoin kept pace with its level in my portfolio.
Ah, the understanding grew alongside the investment size.
Precisely. He was absolutely clear that without that deep, continually growing understanding, he would have sold some or all of his Bitcoin when things got really rough. The understanding was his anchor.
So if we boil Matthew's story down, the takeaway is...
It really drives home the source's main point. Holding Bitcoin without understanding Bitcoin is a recipe for disaster. It cannot be stressed enough.
Because without that understanding,
Yeah.
that foundation...
You're just gambling. You're speculating.
And you definitely will never survive the FUD, the fear, uncertainty, and doubt that constantly swirls around.
No chance. Nor will you handle the volatility. The price swings will shake you out if your conviction isn't rooted in genuine knowledge.
That personal proof of work has to be there.
It's non-negotiable. Which brings us back to the start.
Mm-hmm.
You have to do the research yourself. Don't rush. Don't overallocate before you truly understand. The right amount for you depends entirely on your life, your research, your conviction.
Okay, so let's wrap this up. The core message from our deep dive today seems clear. Deciding to put significant money into any asset, but especially something like Bitcoin, it's intensely personal.
Deeply personal.
It absolutely has to be driven by your own hard work, your own research, and the solid conviction that comes from that, not from asking others how much.
Couldn't agree more. And maybe let's leave people with that quote attributed to Bitcoin, Tina, because it really flips the whole perspective.
Which one is that?
Invest only as much money in fiat as you're willing to lose.
Whoa. Okay. So instead of asking how much Bitcoin you can afford to lose, it asks how much fiat you can afford to lose.
Exactly. It reframes the risk, given what we know about inflation, the guaranteed loss of purchasing power, and the potential for things like bail-ins. It forces you to confront the risks inherent in just holding traditional currency.
That is a powerful thought to end on. It really makes you question what holding money even means today. Given the erosion, given the Cyprus example,
Hmm.
how much fiat are you willing to lose?
It's the ultimate question, perhaps.
Maybe the real cost lies in not doing the research, in not understanding the systems you rely on. So we encourage you, apply that principle of deep work, of building personal conviction, not just to finance, but everywhere. Thanks for joining us for this deep dive.